Next, let us go to learning objective letter B, so which is to explain the nature of the banks and banking operations and distinguish their activities from other commercial entities. So for that learning objective, we will discuss the nature of banks and their banking operations. So let us first define banks. So a bank is defined as a type of financial institution whose primary activity involves the taking of deposits and borrowing for the purpose of lending and investing, and that is recognized as a bank by the BSP. So this definition is provided by Philippine Auditing Practice Statements 1006. Now, another definition of bank is provided by the General Banking Law of 2000, which refers to entities not licensed by the BSP that are engaged in lending of funds obtained in the form of deposits. Now, for us to understand more the nature of the banks and their operation, so let us look at the classification of banks as provided by the General Banking Law. So the different classification of banks, we have first, universal banks or UBs. We also have commercial banks or KBs. Third, thrift banks or TBs, which are comprised of savings and mortgage banks and stock savings and loan associations. We also have RBs or rural banks, co-op banks or cooperative banks, and finally we have Islamic banks. Now, to understand the nature of each classification of the banks, so let us go to our next handout question or multiple choice questions, number 3 to number 4. Question number 3, so which of the following statements refer to a cooperative bank? So let's go first to letter A. So these are banks that have, in addition to the general powers incident to corporations, all such powers as may be necessary to carry on the business of commercial banking, subject to such rules as the Monetary Board may promulgate. So meaning to say, aside from the primary franchise given by the SEC, so they are given the secondary franchise to carry on the business of commercial banking. So letter A is considered as commercial banks. Again, letter A are commercial banks. Next, letter B. So banks that are created to make needed credit available and readily accessible in rural areas as for purposes of promoting comprehensive rural development. So letter B obviously is rural bank or rural banks. Next, letter C. Banks that include savings and mortgage banks, private development banks, and stock and savings and loans association. So letter C are thrift banks. So therefore, cooperative bank is letter D, delta. So banks that primarily provide financial, banking, and credit services to cooperative organizations and their members. So meaning, instead of general public, so this cooperative bank serve a particular clientele, which is the cooperative organizations and the members of those cooperative organizations. Okay, so actually, the classification of the bank, aside from their specific activities, are also determined by the size of their capital and their registration with the BSP or Bangko Sentral ng Pilipinas. Okay, so meaning the Bangko Sentral ng Pilipinas, depending on the size of the capitalization of the bank and their particular purpose, so would assign those different or these different classifications. So another one. So which classification of banks have the authority to exercise, in addition to the powers authorized for a commercial bank, the powers of an investment house and the power to invest in non-allied enterprises? So meaning, aside from being a commercial bank, so these banks are allowed also to act as investment houses and also to invest even in non-allied enterprises. Okay, in that case, that is the universal bank. So usually the universal bank has the broadest characteristic, or broadest activities among the different classification of banks. Okay, so it has the power also of commercial bank, and in addition to that, to act as also as an investment house and to invest even to non-allied enterprises. So we also have universal banks, so which normally are the biggest types of banks here in the Philippines. So number 4 answer is letter A. So earlier we have already described what rural banks are as well as cooperative banks. Okay, but we haven't mentioned Islamic banks. So what are Islamic banks? So Islamic banking, also referred to as Islamic finance or Sharia compliant finance, so refers to finance or banking activities that adhere to Sharia or Islamic law. Okay, so one unique characteristic of Islamic banks is that for example, generally they do not charge interest. Kasi for them, interest is haram, no, or it is not uh, according to their law. Okay, so that is why how do they earn? If interest is one of the main or income generating activities of a bank. Now, the fundamental principle of Islamic banking would be on profit sharing. So normally they profit or they share profit and losses with the client or institution that they are being involved with. So instead of collecting interest. Okay, so because it is prohibited on this institution, the collection and payment of interest by lenders and investors. So they make money or profit through equity participation. So wherein the borrower will give the bank a share in their profits rather than paying interest. Okay, so even some of our conventional banks, so meaning not Islamic banks, like for example, universal banks, so they have windows or sections that provide Islamic banking services to their customers, particularly the Muslims, for example. So number 4, answer is letter E. So next, let us talk about the basic activities of banks or banking institution. Now take note that banks are engaged in a wide range of activities, and they also offer a wide range of products and services to their clients and customers. However, most banks continue to have in common basic activities such as, so number 1, we have deposit taking. Another would be borrowing, so both from uh, private entities and government institution. So we also have lending, so settlement, trading, and treasury operations. Okay. Now, other activities of a bank may also include securities underwriting and brokerage and even asset management, particularly for universal banks. Now, banks may also deal with complex financial instruments such as derivative financial instruments, which may be part of their trading and treasury operations. And also banks can also use them as an end user. Okay, so we will also talk about them, particularly in our next topic. Okay, so next, we discuss on this part the characteristics of banks. Okay, so these are the characteristics that separate or distinguish banks from other commercial entities. So we have to understand this, because we have to understand the nature of the business of our client. So before we decide our audit procedures, so that we can assess the risk of material misstatements of the financial statements of our client. Okay. So first characteristic of bank. So banks have custody of large amounts of monetary items like cash and negotiable instruments. Okay, thus establishing physical controls are imperative or important for banking institutions. They also hold negotiable instruments and other assets that can be transferred electronically. For example, through EFT or electronic fund transfer. Okay, and because of the liquid nature of these assets, the banks are exposed to higher risks of misappropriation and even fraud. And therefore, banks are expected to establish strong internal controls and formal operating procedures. So next, banks are often engaged in transactions that transcend multiple places or jurisdiction. Okay, for example, a transaction may originate from one country and be completed in another country. So that is commonplace in banking operations. Another characteristic of bank is that banks hold assets that can rapidly change in value and whose value is often difficult to determine. So example of those are complex financial instruments, so wherein there are no published price quotation. Okay, and those changes in value can significantly affect their capital position and therefore regulatory solvency in certain instances. So the need for an expert, okay, might be required, no, or should be considered by the auditor in auditing financial statements of banks. Another characteristic of bank is that they derive significant amount of their funding from short-term deposits. So either insured or uninsured. So usually a regulated institution is the PDIC or the Philippine Deposit Insurance Corporation. So which normally insure a deposit of the public or depositors up to a certain amount. Okay, so therefore, a loss of confidence by depositors may result in a liquidity crisis on the part of the bank. Like for example, bank run, wherein depositors rush to the bank to withdraw their money. Okay? And the next, banks have fiduciary duties in respect of the assets that they hold that belong to other persons or entities. So therefore, they are prone to liabilities arising from breach of trust. So another characteristic of banks is that they engage in a large volume and variety of transactions, so whose value may be significant and ordinarily require complex accounting and internal control systems, as well as dependence on the use of information technology. Next, they also operate through networks of branches and departments that are geographically dispersed. So meaning the branches of the bank are normally located in different locations, even across the entire country. And that necessarily will involve a greater decentralization of authority and dispersal of accounting and control functions, with consequential difficulties in maintaining uniform operating policies and accounting systems. So especially if the branch network operates in a different jurisdiction, such as those located in other countries. So because a bank can also have branch not only within the same country but also to other country. Okay, so just think of, for example, international branches or international banks that would have branches here in the Philippines. Okay, or Philippine banks that would have branches abroad. Next, another characteristic of bank is that transactions or banks engage in transactions that can often be directly initiated and completed by the customer or client without any intervention by the bank's employees. Now, for example, transactions made by the client over the internet or through ATM or automatic teller machine. Okay? And the next, banks also often assume significant commitments without any initial transfer or funds, no other than in some cases, payment of small fees. So these commitments may involve only memorandum accounting entry. So therefore, on our part as auditor, the existence of those commitments may be very difficult to detect. Okay? Another characteristic of a bank is that they are subject to stringent government regulations. As you have seen earlier, even as auditors, if we want to audit banks or banking institution, we have a lot to go through first. Okay? So banks are regulated by the BSP, whose regulatory requirements often will influence their accounting principles. So non-compliance with regulatory requirements, for example, the capital adequacy requirement, could have implication in the bank's financial statements or the disclosures on those financial statements. Another characteristic of bank is that there are customer relationships that the auditor, assistants, or the audit firm may have with the bank that might affect our independence in a way that customer relationship with other organizations would not. So that's why earlier we talked about some specific independence requirements with the bank. No? So that is unique when you audit a bank, and which would not be required if you're auditing, for example, other entities. So next, banks also have exclusive access to different clearing and settlement system, for example, for check processing, fund transfers, and foreign exchange transactions. So that is why connected to this one, they are integral part or they are linked to national and international settlement system, and therefore they could pose a systemic risk, okay, to the countries in which they operate, especially if those settlement systems would encounter problem later on. Okay, and then finally, They may also issue and trade in complex financial instruments, so some of which may be recorded at fair values in the financial statement. And therefore, it will involve a significant amount of judgment, no, on the part of the client or the management of the client. So because of that, banks need to establish appropriate valuation and risk management procedure. Now, the effectiveness of those procedures of the bank will depend on the appropriateness of their methodologies and mathematical models that they select. So also their access to the reliable current and historical market information and maintenance of data integrity will also be important in determining, for example, the fair values of those complex instruments. Okay, so those are some of the unique characteristics of banks that we have to consider, no, before we can audit their financial statements. Now let's move to question number 5. So which of the following characteristics does not distinguish banks from other commercial entities? Okay, so letter A. So they derive a significant amount of their funding from depositors, whether insured or uninsured. So this is something unique, no, with a banking institution. Okay, so that is why A is not our answer. Letter B, there are transactions that can often be directly initiated and completed by the customer without intervention by the bank's employees. For example, over the internet or through ATMs. So yes, this is also a characteristic or distinguishable characteristic of a bank. Letter C, they are regulated by the BSP, whose regulatory requirements often influence the accounting principles that they follow. So yes, also. And finally, last one, they use information technology in their operations. Now, while letter D is correct, but this is not a distinguishing characteristic of bank, no, compared for other entities. So because there are also other entities that use information technology in their operation, not only bank. So probably it could be correct if we say that banks has a very significant dependence, no, on information technology in their operations. Okay? Because most of the companies nowadays also use some form of information technology in their operations. Okay, but might not be as dependent compared to a bank or banking institution. So this is why number 5, the correct answer is letter D, Delta.